Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. And today we're doing a deep dive on another uranium stock, Global Atomic. Global Atomic is a Canadian uranium developer with operations in Niger, Africa. They have a market cap of approximately $518 million Canadian, and they trade on the TSX in Canada and OTC markets in America. Standard disclaimer, none of this is investing advice. Make sure you do your own due diligence, and I own shares in Global Atomic. Another thing to note, all of the figures listed in this video will be in US dollars unless otherwise stated. I'm going to go over some of the reasons why I'm bullish on Global Atomic, as well as some what could go wrong scenarios. Global Atomic is currently active in the Timbersoy Basin in Niger, Africa. They have a few different properties, but the main one that they are currently bringing towards production is the Dasa project. This is fully permitted, all the environmental licensing has been done, and they are currently actually building out the mine to bring it to production. This is a huge plus in my book, because unlike NextGen, who we analyzed last week, with Global Atomic there is a very clear path towards production, and the estimated timeline has them starting production in 2024, which is basically right around the corner here. So the area in Niger where the Dasa project and Global Atomic's other properties are is a historically significant district when it comes to uranium mining. Orano, a French uranium company and one of the largest out there, has been mining uranium in the region for 50 years now. So great jurisdiction to be at. It's got excellent infrastructure. It's near major cities, so that's a huge plus. Another plus for Niger, in my opinion, is that it doesn't have the same, let's call them obscene ESG mandates that a lot of the Western countries have. The fact that it can take a mine 30 years to be permitted in Canada, maybe even longer, is kind of a big deal. And when we go to a place like Niger, the government wants the economy to be improved, so they're looking for projects like this, and they're happy to speed the process along, or at least not go over the top with all of these ESG initiatives. So before we get more specifically into the numbers of the feasibility study, which was filed at the end of 2021, which is the major piece of evidence that we'll be looking at that is compelling for Global Atomic, I definitely want to bring up how skin in the game is very important to a lot of investors. I definitely take it into consideration. And when we look at Stephen Roman, the CEO of Global Atomic, according to Simply Wall Street, he is the largest shareholder in the whole company. He owns a whopping 7.48%. So that's skin in the game, my friends. And when you have a CEO who is behind the project that much, that he is literally the biggest shareholder, that definitely gives my confidence a boost. One of the first things I look at whenever I'm doing my due diligence on a company is how much debt they have. Now, of course, just having debt or not having debt does not paint anywhere near close to the whole picture. But when I see a company like Global Atomic that has zero debt, that is another big feather in its cap. Let's now take a look at the feasibility study that was done for Dasa and filed at the end of 2021, which still makes it quite timely as only about 7 months have passed since the feasibility study was filed. Now, one interesting thing about this feasibility study is it uses $35 a pound uranium as the base case, $15 higher than NextGen's, which we examined last week, which was using $50 as a base case. Considering the spot price of uranium is already around 50, I don't see it dropping down to 35. But one big plus is that Global Atomic's operations could still be profitable at $35 uranium. At $35 uranium, we have a net present value of $157 million at an 8% discount rate and an internal rate of return of 22.7. Those are both after-tax numbers, so those are quite attractive considering that's for $35 a pound uranium. Now, I touched on this a little bit in my last video. If you don't know what NPV and IRR are and why they're important figures to look at, there's a lot of videos around on the internet, but I can tell you these numbers are decent when we look at $35. 22.7 IRR, usually you want to see around 20% or higher, so that definitely fits the bill. But now let's move up to $60 a pound uranium. Then we're looking at a $676 million after-tax NPV and an IRR of 57%. So these numbers jump quite dramatically when we bring it up to $60 a pound. I doubt there's anybody watching who believes that uranium will not go to $60 a pound. And as I was mentioning, a lot of people believe it will go to 100. And in that case, we're looking at a 1.5 billion after tax NPV and 99.6 internal rate of return. So like 100% internal rate of return. Those are mythical numbers. So if the price of uranium gets up to $100 a pound, especially within the next few years, I believe that Global Atomic is planning to do a small amount of production in 2024 and then ramp up moving into 2025. So if we're looking at $100 a pound by the time things get started, then these are very phenomenal numbers indeed. It should be noted that these numbers are based on phase 1 of the DASA project, the first 12 years. And approximately 20% of the known uranium resources. So they believe they can keep the mine in operation for 50 years. They're looking at about a 50-year mine life. So these numbers are based on the first 12 years, which will be 4.5 to 5 million pounds of production per year. So the main thing about this mine, and it bears mentioning again and again, is that it is fully permitted. It has an environmental compliance certificate, and the government is given the green light. So it's go time. The mine is currently being built. And like I said, they're planning to start production in 2024. So we'll be able to keep a close eye on things from this point out. But I'm very confident that at least by 2025, end of 2025, they should be able to start producing pounds. So let's talk some bullish news and key points outside of the feasibility study. On June 15th of this year, Global Atomic did receive a letter of intent for the purchase of uranium from a major North American utility. The number is 2.1 million pounds over a 6-year period commencing in 2025. So this is huge. Signing a letter of intent with a major utility means that this could be the first domino to fall, and we could see more utilities come to the table. And in fact, the CEO, Stephen Roman, has spoken to the effect that they are in discussions with other potential buyers. So we'll see how things play out, but this is a great start. Another reason to be bullish on Global Atomic is they actually have a 49% stake in Befesa Silvermet, which is a zinc producing operation in Turkey. And it's been profitable. I did some digging into the company. There's not a lot of information out there. I believe they trade on the London Stock Exchange. But they have been consistently profitable over at least the last 5 years. Consistent cash flows. They have an attractive price to book ratio of 2.8, and their PE ratio is quite respectable as well at 17. Obviously, these are a tiny amount of things to be looking at when you're trying to evaluate an overall company. I haven't done a super deep dive on Befesa Silvermet, but it looks like they are a profitable company, and those profits can definitely be used by Global Atomic to advance their operations, do more exploration, basically any type of CapEx or OpEx that they need. They're going to get some portion of it from Befesa Silvermet, which is great. Global Atomic also has 6 uranium exploration permits in Niger, and this covers an area of 730 kilometers squared, and through that exploration they've delineated uranium resources of around 60 million pounds, and that's above and beyond what's happening at DASA. But DASA is of course by far the most important piece of this picture. I love the exploration potential upside and the fact that they've already found some uranium in the ground through that exploration. But of course, the DASA project ramping up to production is the most important thing to focus on. That's the thing to watch most closely, in my opinion, if you are a Global Atomic shareholder. And I think that it's going to come online within the next few years, and it's going to be able to provide uranium to utilities around the world. We could potentially see China do some buying, and some other areas that are starting up nuclear power plants or looking to refuel their existing fleet as well. So the first bearish thing we have to bring up is, of course, the jurisdiction. There's jurisdictional risk pretty much wherever you go. We talked last week when discussing NextGen about the long permitting times and the brutal bureaucracy of the Canadian government when it comes to getting a mine going. Well, in Niger, if we look at the Travel Safe Abroad website, it's got a safety index of 37 out of 100. It is not a great place to go on vacation. The overall risk of the country is high. The risk of pickpocketing, scams, terrorist activity, and natural disasters are all high. So we could look at, a civil unrest breaks out, a war breaks out, major natural disaster occurs. All of these things are definitely possibilities. That's why I believe it's really important to diversify your investments geographically. I think that brings down the overall risk of your portfolio. That's why I don't really like the approach of pouring it all into the Athabasca Basin in Canada. Some people do that. For me personally, as I mentioned, Canada has its own jurisdictional risks of permitting time, over-the-top ESG mandates, etc. So you've got to take the bad with the good and kind of diversify geographically so that you're not beholden to any one particular area. So that's something to keep in mind. And connecting to that, potential food shortages around the world, particularly in developing nations such as a lot of these countries in Africa, Niger included, could be hit by food supply shortages. Of course, this is all related to the energy crisis. It's very interconnected. You need a tremendous amount of energy to generate food. So we're looking at potential food shortages. And if that does hit Niger hard moving forward here, we could see it lead to huge civil unrest, which could or could not disrupt Global Atomic's operations. And we could see food supply potentially for the workers there being affected too. Although I imagine a company like Global Atomic is hopefully ahead of the curve and has a backup plan in place should food shortages hit the country in terms of taking care of their own workers and their own operation. So another bearish factor that could affect Global Atomic's stake in Befesa Silvermet in Turkey is the rapid inflation of the Turkish currency. I believe up over 70% this year, the inflation that is. People are trying to run to the US dollar. So this is definitely an issue in the country that could affect their operations there. However, CEO Stephen Roman has said all of the accounting is done in US dollars. All the workers are paid in US dollars. Everything is operated with USD in Turkey, so he's saying it's not such a big issue, and seeing as they continue to be profitable, at least for the time being, everything seems good, but it's definitely something to keep an eye on. Another thing to keep in mind, and shout out to the Uranium Twitter hive mind for helping me out with this, is we do not yet know what percentage of Global Atomic will be owned by the Niger government. Now, apparently, Stephen Roman says end of July we should get an answer to that, and they're currently in talks. But we know bureaucracy can push these things back, so that's something to keep an eye on. People are speculating it could be 10 to 20%. I think around 20% is probably a number that a lot of people are looking at. We don't really know, and I've heard a couple different ways of how this deal may be structured. Some people are saying the government will just straight up buy the shares, with somebody else saying that basically the government will pay for CapEx and OpEx based on their percentage ownership, and they will also reimburse Global Atomic for past exploration expenses based on this percentage ownership. So either way, Global Atomic will be getting something out of the deal, hopefully getting a very good amount out of the deal, and I think it will only help propel them forward in their operations. However, we don't know, all sorts of crazy political things are happening around the world. If the government were to come out and say we want 40% or some other very high number and lay down new rules, basically new stipulations that say they get more control over operations, we don't know. Anything could happen, so it's really worth keeping an eye on that number and the details behind it when it does come out. I will also put it out there that according to Simply Wall Street, since 2020, the company has started to report negative earnings, and that was after 3 years of strong earnings growth. And they went positive again briefly in September 2021 and dropped lower than before, down to minus 6.2 million in March of 2022. This is not necessarily a concern as CapEx is being spent to advance the project. They have zero debt, as I said. They have some cash on the balance sheet. But it is definitely something to keep an eye on, especially if inflation continues to rage, supply chain shortages continue. And of course, that's another issue, both inflation and supply chains. When you're building a new mine, the price can end up going dramatically higher than was in the feasibility study. However, I'm not too concerned about this as the feasibility study was filed fairly recently. And Stephen Roman has also mentioned that they're trying to source as much as they can locally so they don't have to ship things in from outside the country, and this can help control costs for, obviously they're using local labor, parts, machinery, all those things. So we'll have to keep an eye on it and see how things shape out. Alright guys, I hope you've enjoyed this breakdown of Global Atomic. Please do like and subscribe and share this with a friend who would be interested in knowing more about Global Atomic. And I'll see you guys next time. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.